So in this 1 year, you are already making money. This means we can sell it for 1.1 million. Hey again, welcome to my real estate channel. I am a super host, and me and my girlfriend are licensed realtor, property manager, and we like to share you valuable tips for the Las Vegas real estate market. So my girlfriend got a client who wants to buy a multi-family property, a fourplex, and she would like to turn that property into an Airbnb monthly furniture rental. We will dive into the numbers and see if the math makes sense and if it's a good time to buy, because we all know interests are sky high and property value are still high. So does it make sense to buy now, or should they wait and buy later? We will dive into the numbers and see what makes the most sense for them. So we are actually in contract for our client, and let me show you guys how the property looks like. This is not exactly the property we are in contract in, but this looks very similar to what our client is purchasing. You see, this is a fourplex. It has HOA and it has no rental restrictions, so it means you can rent it out for 1 month or less. But if you do less, and if you do it like as you run it as a short-term rental, then you need to follow city guidelines and requirements. This property, you see, it's a fair condition. Yeah, this is how it looks like in the other property as well. It's like older kitchens from the 80s. This is what we will remove everything and make it stand out for the short-term rental business. So yeah, just a fair condition. Nothing special. A lot of remodel is needed, but the good thing is the HOA is taking care of the exterior, so it means they are taking care of the paint. They will patch roof. They are also paying some utilities like sewer. They even pay gas for the water heater in this property. They are taking care of the landscape outside. So they are actually taking care of everything what has to do with the exterior. This includes also parking. Let me actually show you the street view. This is how it looks like. So they're actually taking good care of the property, I feel like. So this is the location with other gated apartment units. So it's very centrally located. Let me show you the location. It's roughly here. Cannot tell you the exact address because we're still in contract. Yeah, but this is Spring Mountain, is the Chinatown area of Las Vegas, so you get a lot of good food options here on this street. And this is the highway, and here's the strip. So it only takes you like 8 minutes from this place to the strip, and you see it's very centrally located. But now let's go into the numbers and see if it actually makes sense to buy now. I already entered the numbers, so let me just roughly tell you what is going on. So the property is selling for 600,000, as you can see here, 600,000. So the mortgage requires us to put 20% down. So this means 120,000. The mortgage is 480,000. We need about 100,000 in renovation costs. So we have 4 units. Each unit need about 25,000, and we have a budget of 50,000 for new furnitures. And the financing cost us now around like 10,000. So in total, we need 280,000. Remember the 20% down payment, 120,000, 100,000 in renovation, 50,000 in furniture and like consumables, financing costs for the loan. So it comes to 280,000. So this is the amount you need to have to get started for this property. But if it makes sense or not, let's check out this part. So each unit, we have 4 units. Each unit is a 2-bedroom. I'm calculating that it makes $85 per night. This is actually on the conservative side. So this is my statistic from my units. I have 5 1-bedrooms listings. Actually, not even with a full kitchen. It's just a kitchenette. But you see that I'm getting around like $66.50 per night, and other people are charging $77, but this is only for 1 bedroom. So if you think it's a 2-bedroom with a full kitchen, you can get to the conclusion that $85 per night is very reasonable. I would even say like $95 or even $100 is reasonable, because you can get 4 people inside the unit for $100 a night. This doesn't sound too bad, right? So yeah, we are trying to stay conservative, and we are putting in $85 per night. And the occupancy rate is at 89%. As you guys know, my occupancy rate is actually way higher, all the way back to July when I started to now. You see that my occupancy rate is at 92%. So again, we are trying to stay conservative, putting 89% in here. And then we have the property management fee, which will be managed by me and my girlfriend for 12%. Then we have an Airbnb fee for 3%. The utilities, as I told you, gas will be included, water, sewer will be included by the HOA. So basically we are just paying for electricity and the internet. So I put in $750, real estate tax about $250, so it's about like $3,000 per year. Insurance $220, repairs and maintenance allowance $200. And a very important point is home warranty. You won't get home warranty for commercial properties, but you will get home warranty for up to 4 units. So this $200 in home warranty every month can actually save you a lot of money, and $200 per month for home warranty is on the expensive side. You can get also home warranty starting at about $600 per year. So legal service, if you need, you can put a budget here. As I told you, HOA is $550. So, and then we have some reserves for emergencies also. I put $150 in here. So overall we are coming to a gross potential rent of $122,400. But remember, we had the vacancy, so we are subtracting $13,500. So this is our net rental income. And yeah, we have other incomes which I put over here. Other incomes $450. Those are like extra person. For example, I charge $8 more for another person per night if it's like over 2 person or over 3 person. This is something you can put in. But also there are pet fees. So in my case, or from my experience, I feel like that there are many people who actually choose Airbnb because they can have their pets with them, and hotels and many other resorts or other places don't allow pets. So yeah, this is a way to generate extra income. So we come to a gross revenue of $114,000 and a few dollars here. And then yeah, we have to subtract all the fees. So everything what we put here will be subtracted here. Property management fee, Airbnb fees, utilities, real estate tax, insurance, repairs, maintenance, home warranty, and at the end we are coming to a net operating income of $71,956. And the operating expense ratio is at 37%, means that our cost to operate this business is 37%. Our debt service, don't forget the debt service. We have to pay our mortgage is at 39,600. So we get a cash on cash return of 11.5%. And this would beat many indexes around the world on the stock market. This is actually not all. But before we get into that, let me talk about the financing part. If you like the updates and you like what we are doing, please subscribe to the channel and give us a thumbs up so it helps the YouTube algorithm so we can grow together. The loan to value is 80%. Each month we are paying 3,300 and the interest rate our clients could lock is 8.25%, which of course is super high. But we still have a cash on cash return of 11.56%, which beats the stock market. And they don't need to care about everything because they have a property management who's taking care for them. So even if the interest rate is so high, it's not necessarily bad, because in 2, 3, 4 years, when it goes down to 4% or so, we can cash out refinance, and we had a cash out refinance in our mind anyways. So let's see what I mean by that. If we go back again to the net operating income, which is a very important factor to make this deal like really good, is that we increased our net operating income by nearly 100%, because now the 4 properties are generating about 3,600 per month. So in a whole year, that's like roughly 41,000. So, but now we are having a net operating income of 71,000. So why is the net operating income so important? Let's go over here. We can assume that there's also a rental inflation of the time where we do a cash out refinance is assuming it's in month 60, but it can be like in between. It can be after 2 years when you don't get a prepayment penalty. You can do a cash out refinance, and assuming you do it like in between 24 months to 60 months, and your net operating income is a little bit higher than it was in year 2023, because in 2025 or 2026 everything will be a little bit higher, right? So your net operating income is around 90,000, and we are putting a cap rate of 8%. This is like a multiplication of how many years you would need to make this amount of net operating income to get your initial purchase price back. This is at 8%. So in other words, let me pull up a calculator. So let's say 100 is your purchase price and 8% is a multiplicator of 12.5 years of the net operating income is your purchase price. So if you buy something, let's say for 100,000, and someone selling it for you as 8% cap rate, so each year it makes 12,500 in net operating income. So this amount basically indicates how good of a deal you get, how many years you would need to get that amount of money back. This means we can sell it for another investor for 1.1 million. So remember, each month we are making around 11% in return, and on top we are nearly doubling our purchase price, but we only put 280,000 in, and our mortgage is around 480,000. So if you subtract our final calculation, our final price of 1,130,000 minus, for simplicity, we just put the mortgage of 480,000 in, boom, and minus the initial investment of 280,000. So boom, 370,000 is what we generated in extra value with an investment of 280,000. So you see, we are more than doubling our money. But there is one issue with this kind of calculation. On the paper, of course, it's correct. But here's the thing, it's a residential property. So everything what is from 1 to 4 unit is considered residential. But this analysis is more a commercial analysis. Even if the proper value for this kind of property for another investor is 1.1 million, you can't really sell it for 1.1 million, because the appraiser will come to your property and will compare this kind of property, a residential property, with other residential properties and pull out comps to see what a fair value is. So in this case, you will be compared to your neighborhood, like the ones I showed you here, right? So you will be compared with every fourplex here in this neighborhood. Is it fair? To a certain extent, yes, because it's a residential property, but you see that actually on a commercial level, which starts from a 5plex, this property is actually worth around double. Your mindset should be to cash out refinance when you think the time is right, so you can pull out most of the 280,000 you put in and put the 280,000, your initial investment, into another property, because this property is still generating money for you. So the mindset for this property, it's a long-term hold. It's not a flip for another investor. It's not just increasing the net operating income and then collecting big bang. No, this is something you can hold for 10 years plus, and you will be very happy with it. So let's talk about some other issues we have with the property. Of course, you can see financially wise, numbers wise, this property is top. But now let's talk about the interest. Interests are super high, and is it right time to buy a multifamily property? I want to show you this article really quick, so we don't need to dive into the details, but you see that the US needs 4.3 million more apartments by 2035 because affordable housing units are in a decline, and population is growing, and we have people who want to move out of the house, and we just have too little housing. This is the problem we are facing. And then now let's apply this into the Las Vegas area and see how the population is doing. So we see that the population of Las Vegas is actually increasing over time. Let's go into this data. I think it's easier to follow. So you can see in 2008, during the recession, we still get around like 65,000 people. Here it is, like 65,000 people, close to 70,000 people, and it goes up. And we are actually every year we get around 70,000 people. The growth percentage is in decline, but you can see it's like constantly in the 60,000-70,000 range. Matter of fact, we only built 13,000 apartment units last year, as of my knowledge, and not too many single family properties. We are not getting enough supplies for our growth. This is why actually our rent is growing up insanely, because there's not enough supply. If we have enough supply, then we wouldn't have this issue. But of course, there's a point. Everyone can argue with me and tell me, okay, we are close to a recession. Why should you invest now, and why not after the recession? So the thing is, it's super hard to time a recession and the end of recession, and it's super hard to buy right at the bottom. But I will speak about this a little later. Let me show you also this, because many people are also telling me when the recession is coming, rent is also decreasing, which is not right, because let me show you this. So you can see we had a big recession here in 2008, or even like the .com bubble here in 2001. You see rent is constantly increasing, because it makes sense. When there's a recession, many people will lose their properties. Many people will lose their single family houses and they have to rent. So this is sad, but that's fact. 2005 to 2010, we had a rent increase. Same thing over here, .com bubble. Yeah, this was a milder increase. Let's go down here. So it's year over year, and you can see, okay, from 2008 to 2009, we had a minimal drop of average rent price per square foot. But if you go down here, and you see that actually 2009 there was a deflation. So a deflation is the opposite of an inflation. So in fact, the price increases as well here in this 2 years. Yeah, so this is about the rent. So you can be sure that rent shouldn't be a problem, and rent will not decrease, and this will also apply for short-term rentals, in my opinion. Let's talk about timing the market, or like buying the bottom or wait for a better buying opportunity. So let's say the blue line is the property value. So the higher it is, the more expensive it is. And of course, we can head into a recession. We can have a price correction of another 5%, 10%. Do I think we will get a 20% price reduction? No, not here in Vegas, not with the current situation. But is it worth to wait? That's the question, right? So, of course, let's say you are buying now at this level. Let's do it yellow. So you are buying this in yellow. Green is a timeline. So you are buying here. It goes further down. Okay, you maybe missed a better opportunity in 6 months, but after another 6 months, you would be like around that level anyways. But now you have already this timeline in between. You know, the timeline in between is already 1 year. So in this 1 year, you are already making money. So even if you are not buying now, and you are buying and you are like doing it perfectly and like really hit the bottom here, you are losing half a month. So half a month with a deal which I showed you, which is making 11% cash on cash, and you got the construction going, you got the property ready, and it's making money, and you can saving up for the next property. Why should you always wait for a better opportunity? Because in life it's super hard to time the market and do the right deals at the right time. It's just super difficult. So just be consistent and have like a rule, like, oh, I buy every 2 years, I buy every year, or I buy twice a year. So you will have deals which were timed good, and some maybe average, and some maybe bad. But we can agree that in 5 years, 10 years, all those properties are very good. So for example, if you bought something in 2009, 2010, 2011, 2012, now you will be in a very good shape. And it doesn't really matter when your property value is at 350,000, if you bought it for 120,000 or 130,000 or 150,000. Important is just that you made money out of the recession, and not so much about the timing. Yeah, so this is everything I want to show you today, and I hope there was some valuable information for you. Thank you so much. Please subscribe to my channel if you learned something, and hopefully see you in the next video. Thank you, bye.